When people imagine World War II tank warfare, they imagine burning Jagd Panthers, charging Shermans, or Tigers dominating open fields. But the real tank battle happened somewhere else. It happened in steel mills. It happened inside factories. The decisive question of armored warfare was never simply which tank was better. The real question was which economy could afford to build tanks faster than they were destroyed. Germany entered the war believing superior engineering, operational brilliance, and tactical innovation would compensate for economic weaknesses. The United States entered the war with a totally different idea: build so much equipment that battlefield losses become financially irrelevant. American tank production numbers are almost absurd. The United States produced roughly 61,000 tanks during World War II, over 100,000 armored vehicles in total, and nearly 50,000 Sherman tanks alone. Germany produced approximately around 20,000 tanks during the war, depending on counting methods. This means that America built roughly 3 times more tanks while simultaneously building ships, bombers, and trucks. The question becomes how? The American advantage was industrial organization. Tank production spread across enormous industrial networks. Factories producing tanks included locomotive companies, automobile companies, railway manufacturers, and heavy machinery firms. The Sherman alone was produced by around 11 major manufacturers and associated networks. Interchangeable parts allowed factories to share components across the production systems. This mattered enormously, because war production is not merely manufacturing. It is manufacturing without bottlenecks. If one factory stops, another continues. If one supplier fails, others replace it. American industry prioritized interchangeable parts, standardization, assembly line efficiency, and distributed manufacturing. German industry prioritized customization, engineering complexity, and smaller production runs. These decisions shaped outcomes. The Sherman tank became famous for criticism. Common arguments were thin armor, a weaker gun early in the war, and less impressive specifications. These statements often ignore economics. Sherman design priorities included reliability, transportability, standardization, repairability, and production speed. That is why nearly 50,000 tanks were built. Panther production was around 6,000 in total. America built tanks as industrial products. Germany increasingly built tanks as engineering projects. One approach scales, the other struggles. A common claim is that Albert Speer nearly solved German production in the second part of the war. Production certainly increased. German output rose substantially during 1943 and 1944 despite Allied strategic bombing. However, increasing production does not equal solving structural problems. Germany still faced smaller economy, resource shortages, oil scarcity, transport destruction, labor problems, and strategic bombing. Even impressive production increases could not overcome economic fundamentals. Factories cannot manufacture missing resources. War spending reached staggering levels. The United States spent hundreds of billions of wartime dollars. Converted into modern values, multiple trillions. But cost must be understood correctly. The question is not how expensive war production was. The question is how expensive was losing. American leadership chose spend enormous sums now and avoid catastrophic defeat later. This calculation shaped victory. German armored warfare produced extraordinary operational successes, but operational brilliance has economic limits. You cannot repeatedly trade one tank for 3 enemy tanks and expect victory forever. Eventually, mathematics wins. Industrial warfare rewards replacement capacity, repair capacity, logistics, financing, and resource security. The side capable of sustaining losses longer usually wins. World War II repeatedly demonstrated this. The lesson is not about tanks. The lesson is about systems. Businesses often admire innovation, elite performance, and superior products. These matter. But scale matters too. A financially stronger competitor with better cash flow, larger supply chains, deeper financing, and stronger logistics often wins. The same applies to nations. Economic resilience creates strategic resilience. World War II tank production teaches production capacity is a weapon. Finance is a weapon. Supply chains are weapons. Most importantly, industrial capacity matters more than battlefield brilliance. That lesson remains expensive and extremely relevant. The decisive weapon of World War II armor warfare was not the Sherman, the Panther, or the Tiger. The decisive weapon was the factory, because ultimately the side capable of replacing losses faster than losses occur usually wins. And in World War II, America built an economy capable of doing exactly that. I hope you enjoyed this episode. To make sure you don't miss my future work, subscribe to my channel and press the bell notification button. Thank you for watching and see you in the next video.